Hello everyone, I hope so you will be fine. Today we are going to practice the questions and again our topic is income statement and statement of comprehensive income. Okay, so here we have a first question. So the question is which of the following items should be shown as a component of comprehensive income? So guys, please remember, so comprehensive income mean to say always comprehensive income equals net income plus minus other comprehensive income. So please remember this comprehensive income is shown under the statement of comprehensive income. Okay, it's a name of statement, and this statement, which is statement of comprehensive income, okay, shows the comprehensive income, and comprehensive income is always equals net income plus other comprehensive income. Net income you will get always from the income statement, and in other comprehensive income there are four items usually which we report under the other comprehensive income. So let me quickly again refresh the format of net income first and then other comprehensive income, and if you will add these two, this will become your comprehensive income. So here we go, we have a short format here quickly. So this is the format of net income in front of you, and I'm assuming, for example, we are selling, let's assume three product A, B, and C. Okay, I'm assuming product A is our discontinued operation. I have already explained in my lecture what is discontinued operation. Maybe this product line we have sold, or this segment we have sold during the year, and product A and B is the continued operation. So whenever we prepare income statement, please remember we have to show separate information of continued operation and separate information of discontinued operation. So I'm assuming here from here till this point. So we have information for continued operation, and then this information, this section is for discontinued operations. And once you will plus these two values, like income from continued operation and income or loss from discontinued operation, so this is equals your net income. Okay, so this is the quick format. I'm not going into much detail. So here we have, for example, first we will write here net sales. Net sales, it is always equals to sales minus sales return. So by the way, this is summarized version of income statement. So then we deduct cost of goods sold. It is equals gross profit, right? Then we deduct selling expense and administration expense. So this is called income before operation. Please guys remember this up to this point, from net sales till income from operation. This is also called operating section of income statement. Okay, operating section means to say here we will record revenues and expenses which belongs to our normal trading or normal operations. Okay, so then what we will do after that, we will plus here other revenues and gains. So this is actually non-operating, you can say, and then we will deduct here other expenses and losses. So this is called what? Income before tax. Okay, so guys, then what we will do, we will deduct a tax expense. So this is called income from continuing operations. Understood? So please remember, if you do not have any discontinued operation, then this will be equal to net income value. But here we have, I'm assuming we have discontinued operation. Then we will write, okay, whatever gain or loss we have from the discontinued operation, every value we will write net of tax. For example, we have a gain of 10,000 and let's assume tax is 40%. So 10,000 minus 40% tax, 40% will become 4,000. So 10,000 minus 4,000, so will become 6,000 net of tax. So please remember, whenever we write any value for discontinued operation, so we always write post tax, net of tax. So then this was our income from continued operation, and this is our gain from discontinued operation. So once we will add these two values, this is called net income, and this is called your income statement. Okay, so what I was telling you your comprehensive income always equals net income. This is how you will calculate net income. Then we add here other comprehensive income. Please remember, in OCI, usually under US GAAP, we have a four items. Okay, how which four items are there? First, I'm not going to explain in detail. I'll just highlight the points. So first we can write here gain or loss on hedging instruments in the cash flow hedge. This is the one item which we write under the OCI. Please, you have to remember this name. Okay. Then second, unrealized Holding gain or loss, not realized. Unrealized gain or loss due to changes in the fair value of available for sale debt securities. Not trading securities, not held to maturity securities. Only available for sale debt securities. And their unrealized gain or loss will go to the OCI. Then translation gains or losses for financial statements of foreign operations. If you have a foreign operations or you have subsidiaries in foreign countries, so when we convert their financial statements to our reporting currency, so at that time, due to changes in exchange rate, there could be a gain or losses that will also be reported under OCI. Then certain amount, okay, associated with defined benefit post-retirement plan. So this is actually relevant to pension. So this values will also go to the OCI. So these are the four items in OCI. So please remember here, if you will take net income plus minus OCI item, plus minus OCI item. Okay, so this is called what? Total comprehensive income. So net income plus minus OCI items equals comprehensive income. Now, guys, I'm going to go through the questions quickly. So here we go. So question was, which of the following items should be shown as a component of comprehensive income? So sometime, guys, please remember comprehensive income also defined theoretically this way. Okay. Theoretically, I'm telling you. This is the equation, net income plus OCI. So please remember comprehensive income includes all changes in equity of the business except what I'm telling you, it includes all changes in equity of the business except those transaction or except those investment which is made by owners. So in simple words, investment made by owners. So this will never go to comprehensive income, okay, or income statement or distribution to the owners. For distribution to owners, for example, when you pay dividend, we never record in the income statement or other comprehensive income. Or whenever shareholders invest into the business, that will also not be recorded in the income statement or in other comprehensive income. Okay, so this is what I told you. Theoretically, how we define comprehensive income. So comprehensive income includes all changes in equity of a business except those from investment by owners or distribution to owners. Okay, except these two, we don't record. Everything is recorded under comprehensive income, but these two things will never be recorded under comprehensive income. Comprehensive income is say net income plus OCI. So your question is, which item should be shown as component of comprehensive income? So number one, foreign currency translation adjustment. Yes. You know, I told you for translation gain or losses, we always record in OCI. Okay. So this will go to OCI and OCI is the part of comprehensive income, right? Because comprehensive income equals net income plus minus OCI items, right? So this is actually answer. Then a deferred revenue. Deferred revenue always your liability. Actually, it is the amount or it is the revenue which we received in advance. But against this revenue, goods or services will be delivered in the future. So it is called liability. Okay, it will never go to income statement or it will never go to OCI. It will straight away go to the balance sheet. It's like you have received advance payments against the goods or services which you will deliver in the future. So then additional capital contribution, actually it is investment made by owners, whenever we issue the stock, so we debit the cash, credit the share capital and credit the additional paid in capital. So it is in this account usually creates with the investment which is made by owners. So this will never go to OCI. Then dividend paid to shareholder, actually it's a distribution to the owners. This will also not go to the comprehensive income. Only what will go? Foreign currency translation adjustment. We have a next question, guys. Question number 2. We have a next question on your screen now. So the question is, during the month of October, a company purchased 100 units of inventory for 500 per unit. This is the value purchases and sold 900 of these units. You sold 900 units out of 1000 units. We sold 900 units. Okay. Which represents 10% of the company's annual sale. Annual sale budget in units. Okay. The company also incurred administration cost of 300,000 during October by applying the matching principle. This is the requirement. By applying the matching principle, the total amount of company's expenses on its October income statement is. So you have to tell what is the amount of expense by applying the matching principle. So please remember, guys, what is matching principle? Matching principle mean to say, for example, if I'm recording here, look at here. If I'm recording sale of 900 units, so all related expense I have to record in the same accounting period. For example, the sale is recorded in year one. So all related expense to this revenue will be recorded in the same accounting period. This is called matching principle. Understood? Now please remember here. So because we are provided two things here. Number one, we sold 900 units. So it means because we are recording sale of 900 units, right? So first thing, as per matching principle, we have to record cost of goods sold of these 900 units. Okay, so because this is a relevant expense, right, to this sale. So second thing, we have also incurred the administration cost. Okay, we also incurred the administration cost. Okay, how much? 300,000. Although it is period cost, but it belongs to this period, so it will be recorded in this period. Now the point is that how you will get the cost of goods sold. So we sold 900 units. Simply we will multiply with the purchase price. So purchase price or the cost of a unit was how much? 500. So 900 times 500, it is, I believe, 450,000. Then we have a administration cost, which we also incurred in the same accounting period, that will also be added. So total value is going to be how much? 750,000. So this is what is the total expense, because he's ask you total amount of the company expense, which will be recorded in the same accounting period by using matching principle. This should be how much? 750,000. So which is the correct option? D option. Then guys, we have another question on your screen. An income statement could be used by an external investors, okay, for all of the following purpose except. You have to understand the question. Like if you're external investors, so you can use income statement for all of the purpose except, like for which purpose, in simple word, you cannot use the income statement. Okay, this is the question. Being external investors, for which purpose you cannot use the income statement? This is the question. So here we go. Let's read the requirement. Number one, as external investors, I can use the income statement to compare the company results to those of its competitor. Yes, I can use one company's income statement or one company's financial statements with the other company's financial statement, or one company's income statement with the income statement of other company, right? So it is the purpose. For this purpose, I can use. But the question is, for which purpose you cannot use? Number two, analyze, because obviously guys, we as an investor, we compares financial statement of the different companies to see which company is performing well. So for this purpose we use, but the question is for which purpose we don't use. Second requirement, analyze the company's performance compared to the budget. Guys, as external investors, I cannot do this. Reason, because budget is the internal document which is not published to the public. So if I'm the external investor, I have only information from the income statement, but I will not have access to the budget. So that is why I cannot compare income statement with the budget, right? To assess the company performance. Actually, this is the answer, because I cannot use for this purpose because I don't have access. This is the answer of the question, guys. This is the answer of the question. For this purpose, I cannot use because I don't have access to the budget. But see, assess the risk of companies achieving future profitability. Yes, as external investors, once I'll read the current year income statement, by reading income, expenses, gain and losses, whatever are presented in the income statement, maybe I can make prediction for the future. For this purpose, I can use. Then the predict the company's future revenue. Yes, I can use also to make the prediction for the future revenues, and I can also assess the risk as well. Okay, because if companies profits are less, or if it is reducing over the years, it means there is a risk. So I can use for all these purpose, but I cannot use for this purpose. The reason, I may not have access to the internal document, which is the budget, right? So this is the answer of the question. We have another question now. The question is Raw company's financial statement had the following balances at December 31st. First, we have infrequently occurring gains. This is like, non-routine gains. You can call it other gains or other revenue. So foreign currency translation gain, we know this will go to OCI. Net income, okay, this is the net income. Unrealized gain on available for sale debt security, yes, this will go to OCI. And this item is always written in the under the income statement. Okay, income statement mean to say from income statement we derive the net income. Okay, now what is the question? What amount should ROC report as comprehensive income for the year ended 31st December? Comprehensive income. So guys, please remember comprehensive income always equals net income. Okay, and plus we can write the plus minus OCI items. So net income is already available. How much? 400,000. And I cannot consider this item. The reason this item is already included in the calculation of net income as a other revenue or other gains. So this you have to simply ignore this point, first point, because it is already included in the net income. Second, foreign currency translation gain. Yes, it's a part of OCI item. So how much is the gain? It is a gain, so it will be added. How much is the gain? 100,000. Then what? Again, we have a gain on available for sale debt security. It's also OCI item. So 20,000. If you will add also, it is 520,000. So this is equals your comprehensive income. Okay, so 520, option A is the correct option. We have another question. Which of the following acceptable formats for reporting comprehensive income? Guys, please remember, when we prepare statement of comprehensive income, okay, so there are two formats are there, because under statement of comprehensive income, we calculate comprehensive income, right? And comprehensive income equals net income plus minus OCI item. So there are two formats are there. First format is, I'm just explaining directly with the help of question. First format is called one continuous financial statement. One continuous financial statement is what? This is first format, okay? First, one statement, continuous. And then there is another format which is called two separate but consecutive financial statement. Two separate but consecutive financial statement. Okay, so how it works actually, let me show you here. Let me show you. One continuous means say what? One continuous mean to say you will plug these two things. What? First, you will prepare income statement like just I'm showing you from the format here. We have a format. One continuous means say what? For example, this is one continuous I'm showing you. This is how one continuous will be prepared. First, we will write it here. Let's assume statement of comprehensive income. So we'll write like that. From net sales till net income, we will go. Actually, it is income statement, right? And immediately after income statement, so what I'll do, I'll add here plus minus OCI items. Whatever OCI items, if you have, so you will just add, and this is equals what your comprehensive income. This is called one continuous. What is two separate? Two separate means say how? So let's assume this is your income statement. On the first page, two separate mean to say you can assume this way. First, we will prepare. Let's assume if this is the two pages. On the first page, we will prepare, for example, on page one, we will prepare this income statement only. And in the second page, because I told you now we have a two separate but consecutive. In the, for example, second page, I'll write first value as a net income. For example, here net income was $100. So I'll write first item as net income and then I'll add OC item. So equal comprehensive income. This is called two separate but consecutive. So one continuous mean to say income statement plus minus OCA item immediately. So this is what is comprehensive income. So this is one continuous. So two separate means say on the first page up to net income. On the second page, we will start net income. Then we'll add OCA item. Okay. So this is what is two separate but consecutive. So these are two presentation. I hope so. If you are not clear with this, guys, because I'm discussing question, you can go back to the, you can check my channel. So in the playlist, you can find CMA Part 1 lecture series. This playlist is available. So there you can find lecture series wise. Okay. And see, similarly, if you want to watch lecture for CMA Part 2, again, you can visit the playlist. And if you want to watch the practice question, again, you can visit the playlist. Okay. So there you can find. So here, guys, they're saying which of the following are acceptable formats for reporting comprehensive income. So there are two acceptable formats. Number one continuous financial statement, and two separate but consecutive. Okay, these are two options only. So in the statement of changes in equity, no. In the statement in a separate statement of net income, no. Actually, these are the two only acceptable one. Okay, so 1 and 4 option is correct because first and four. Okay, 1 and 4. So D option is correct. I hope so clear. Okay, guys. Thank you so much. See you in the next video. Thank you so much, guys.